Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRNAM for Tuesday, April 4th, 2023. And our top story today, will CD rates continue to rise? And joining me now to discuss this and a lot more, Ted Rossman is a senior industry analyst for Bankrate. Ted, it's great to see you again. Thanks so much for joining us on the program this morning.
My pleasure. Thanks for having me.
It's always great to get your technical analysis on banking, savings rates, and also credit cards, which we'll talk about in segment 2. Let's talk about certificates of deposit and savings rates. And we've seen a steady, healthy increase by the Federal Reserve. How is that translated first to savings rates, but then overall to certificates of deposits?
This is one of the real silver linings of the Fed's rate hiking campaign. Now, of course, it's happening for an important reason, which is to fight inflation. But, a lot of these rate hikes have been negative for consumers. We're talking about much higher credit card rates, much higher mortgage rates. The silver lining is for savers. And we're seeing completely liquid, completely federally insured savings accounts over 5%. Now, in some cases, same thing for 1-year CDs. 5-year CDs are close. The tops out at 4.55%. But really the point here is if you are aggressive in searching for the best yields, you can actually get a really nice return on your cash deposits. That was not the case a year or two ago.
And as you said, this is a really good environment for savers. The stock market's been a little volatile, but being able to put your money into a certificate of deposit, let's talk about that for a minute, because you can determine whether or not you want to do a CD for a year. There's different denominations or different maturity dates, right? But that comes with some liquidity restrictions, for lack of a better term.
That's right. Yeah. So you are locking up your money for a period of time, for better or for worse. Obviously the challenge there is you can't tap it without a penalty. There is a way to get it, but you're probably going to forfeit something like 3 months or 6 months of interest in most cases. So you do want to be confident, hopefully, that you can leave the money in for the full time. The positive, though, is that if rates were to fall, you're locked in at that better rate. So that's particularly a consideration right now on a 5-year CD, because the rate crystal ball gets cloudier the further out we go. It is interesting that 1-year CDs are yielding more than 5 years right now, but that's because we think that the Fed's rate hiking campaign is nearing an end. And in fact, the market is starting to price in perhaps some rate cuts by the end of the year. Looking further out, it is certainly possible that rates will be lower 5 years from now. So that's the advantage to locking in this higher rate. You could get as much as 4.55% right now on a 5-year CD. It's all about your time horizon. If you're a retiree that has different buckets of money, that maybe there's some cash you don't need for 5 years, but you don't want to take a ton of risk, that's kind of the sweet spot here.
And I remember as a little boy sitting next to my grandfather, and because he had some vision problems, he was probably in his 70s or 80s, he had to use a magnifying glass, and he would scour the Baltimore Sun to find the best CD rates. Ted, how do you find, I'm assuming you can go to Bankrate.com to find the current CD rate, so if someone was interested. And by the way, you don't have to bank, for example, in Maryland. You can bank across the U.S., correct?
Yes, that's right. We have a great listing at Bankrate.com. So we're talking about federally insured, nationally available accounts. The top yielders are not typically household names, but that's okay. As long as there's FDIC insurance in the case of banks or NCUA insurance in the case of credit unions, you're totally protected up to $250,000 per depositor, per ownership category. So yeah, these may not be banks you've heard of. The top of the table is banks like CFG Community Bank and GTE Financial Credit Union, Colorado Federal Savings Bank, the First Internet Bank of Indiana. These are not typically household names, but they are available nationwide. they are really good places to park your money, because let's face it, the big banks are not offering much at all on savings. They do a little better on CDs, but they're still not at the top of the table. It's these smaller banks that compete on rates, and they don't have as much overhead. They don't have their name on the stadium. This is really how they make their mark.
Yeah, I'm actually looking out the studio window and I can see where the Panthers play, and I'm not going to tell you whose name is on that, but you made a comment, so I'm going to comment right back. How would I know, Ted, if someone is FDIC insured? So if I'm someone who's going online, doing my research, which people tend to do, they're going to Bankrate or they're just going to different banking sites, how do I know that they're federally insured?
All of the institutions that we list at Bankrate are federally insured, either FDIC or NCUA banks and credit unions, respectively. Often the institution's website will tout this as well. You can look it up independently as well. So you could go to the FDIC's website or the NCUA's website. This obviously has been in the news recently with different bank failures like Silicon Valley Bank and Signature Bank. So it is really important. Know those limits too. I mean, some retirees are fortunate to have more than $250,000 that they're looking to invest. That's the typical FDIC insurance, but it is per depositor, per ownership category, per institution. So you can split it up. For one, if you have a joint account with your spouse, well, then the protection doubles to $500,000. But you could put your money in different banks. You could put your money in different ownership categories. But yeah, be sure to stay within those limits. I actually saw that famous basketball player, Giannis Antetokounmpo. He was in the news recently that his financial advisor has him in something like 25 different bank accounts so that he's within those limits. Now, we don't all have as much money as he does, but make sure that you're protected.
Yeah, well, I think it's called laddering your CDs in terms of maturity, but also diversify in terms of the banking institutions. That way you're not crushed if one bank happens to have some challenges. Ted, I need to take a very quick break. When we come back, we're going to flip gears and talk about credit cards. Just how are they impacted by interest rates? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, Ted, thanks so much for staying with us. Really appreciate you hanging around for segment number 2 this morning.
Of course, thank you.
All right, let's talk about the flip side. And when we had you on, I think it was in January, February, we had talked about just the increase of credit card debt, personal debt, and it's certainly gone up. But let's talk about credit card interest rates, Ted. How are we doing? What does that APR number look like now? It's getting up there.
Unfortunately, credit card rates are at record highs. 20.09% is the national average, according to our Bankrate data. The Fed puts out a report that only looks at accounts assessed interest. That average is 20.4, so that's even worse. And that really speaks to the half, roughly, of credit card holders who carry debt from month to month. Because that's an important point. If you're among the half, more or less, who are paying in full and not paying interest, well, then credit cards are great. You get rewards, you get airline miles, cash back, all these buyer protections. The problem is when you carry a balance, and that's what's super expensive. This is one of the downsides of higher rates.
Yeah, and a lot of people go in on those 12 to 15 to 18 month 0% interest rates. They run up a balance, Ted, and then poof, that time goes quick. And look, there may be a rational reason why they're doing that, right? They may need to do that because maybe they lost their job. Maybe they're getting their hours cut. All rational. But maybe what you have to watch out for is these rates really have a tendency to jump up when that grace period is over.
Yeah, I'm glad you brought up those 0% promotions because those can be a great way to save. But you're right, it can also be a trap if you're running up more debt. Sadly, we are seeing a lot of people these days putting essentials on credit cards and financing them over time. I mean, that's a tough position to be in. We see more people carrying credit card debt. There is more of that debt, and then it costs more. So it's really a triple whammy. So one of the best ways to get out of credit card debt is to use a 0% balance transfer card. And the best way to do it, I think, is to avoid making new purchases on the card, if at all possible, because it's hard to hit a moving target. So try to just divide what you owe by the number of months in your 0% term. Try to stick to it. So you take your existing debt, maybe it's 20% or more, wrap it into this new card. These offers last as long as 21 months, and examples include the Bank Americard, the Citi Simplicity, and the Wells Fargo Reflect.
In terms of the credit card rate increase, so let's say the Fed acts, how long till you see that interest rate increase passed along to you as the consumer if you're the holder of one of these credit cards?
This is another important point because these rate hikes are affecting new and existing balances. And the Fed has now raised 4.75 percentage points since March of 2022. So that's a big increase on your new and existing debt. Typically, these rate hikes filter through to credit card borrowers within a statement cycle or two. So within a month or two, you'll probably see the change, even for your existing balances. And that's where, not that 16% was a picnic, but now we're over 20.
Yeah, and what about, let's talk a little bit about, for the last remaining couple minutes we have, let's talk about that credit score, because that credit score when you're taking a credit card or you're applying for a credit card, that can help you get a better rate, but you also got to manage that credit score to make sure that don't have too big of a balance, which will negatively impact it.
Your credit score is one of the most important numbers in your financial life because it goes a long way toward determining whether or not you're approved for loans and lines of credit, even some non-credit obligations like renting an apartment or signing up for utility or cell phone service. They often do credit checks. Even some employers will look at your credit reports. So it is a very important part of your overall financial picture. A lot of it comes down to the fundamentals over time. So over the long haul, pay your bills on time, keep your debt low, successfully manage different types of credit over the years. There are some things you can do quickly, though. One of my favorites is to lower your credit utilization ratio. So credit you're using divided by credit available to you, specifically on credit cards. So that's a case where maybe you ask for a higher limit or you make an extra mid-month payment because a lot of times it reports on the statement date. So knock that balance down before it even comes out. And then one other idea could be to get on someone else's credit card as an authorized user. That can be a way to piggyback off of their hopefully positive credit history if you're looking to build or rebuild your credit.
So Ted, can I call my mom and dad right now and ask them to be put on their credit card?
You can actually. I mean, it's something that's especially common for young adults as a way to build credit, but really anybody could do that. In most cases, it will lift your score. There are a few times that it could actually hurt if the primary borrower is not managing their account responsibly, but then it's actually easy to unlink that. And unlike your own late payments, those can actually vanish immediately. So there's actually a lot of upside, really limited downside. That's a good option. And then finally, look for errors on your credit reports. About 1 in 5 Americans are being dragged down by some kind of mistake. So pull your reports at annualcreditreport.com. Make sure that everything's correct.
Yeah, and by the way, I want to say something to my parents. I'm not going to be placing a phone call. I'm not going to be asking to do that. But I just want to know from Ted. I'm a little old, I think, to do that right now, Ted. Ted, thanks so much for joining us. Really appreciate your wise insight, and we look forward to having you back on the program again very soon.
Sounds good. Me too. Thanks.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, subscribe to our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? We'll visit our website and, of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe. Keep on saving. Don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.